Stocks trade in a range after a sell-off on Monday following Powell's indication of gradual cuts in interest rates and a rise in tensions in the Middle East, even as China eyes a recovery ahead. IT and capital goods are prominent gainers, even as metals and realty stocks drag.
Being a top 3 private bank is Kotak Mahindra's rightful position, says CEO Ashok Vaswani, who eyes significant market share gains following the successful implementation of RBI-directed corrective actions. He expects the bank's network to expand to 3,250 to 3,500 branches in the next 3 to 4 years.
After a heady September that has seen Bajaj Auto emerge as the number 2 in the EV two-wheeler segment, the company is now confident of wresting the top spot given the strong momentum and its new product pipeline.
The Reserve Bank of India has spotted deficiencies in the adherence to prudential norms and in business participants of the several gold loan providers. The regulator has given lenders 3 months to set things in order. Analysts see limited impact for large gold financiers.
Market regulator SEBI introduces a new product to bridge the mutual fund PMS gap, eases rules for investment advisors, investor nominations and debt issuances, allows market trades using UPI, gives mutual funds a light option, but widens the definition of connected persons in insider trading, a concern for many.
Hello, good afternoon. You're watching Business Lunch on CNBC-TV18. I'm Vinny Motiwala. With me is Varmash Patake as well. Varmash, very good afternoon to you as well, but not a great afternoon coming in, right? We saw that the Nifty actually came up in the green at one point of time again. Managed to see a slight bit of a recovery, but again in the red. Not much of an exciting day today, at least coming in on the Nifty as well as the Sensex today. Back in the red again, as you can see on the screen as well. Only mid-cap is managing to hold on to some bit of a green today, again back in action. But not much excitement there.
Heading into a holiday, I guess that is what the sentiment is on the street.
Are you also in the holiday mode then?
Who isn't? And that too, especially when it's a midweek holiday. So yes, the markets too seem to be in a little bit of a holiday mode. But yes, the Nifty is having a bit of a choppy session this morning. And you need to understand the fact that it's also the Nifty Bank and the Nifty Financial Services expiry both taking place in today's session itself, and that is why the Nifty now holding on to some very key levels now at around 25,750 is that very important support level on the downside that needs to be watched out for on the Nifty. It has rebounded from those levels and again now has slipped back towards those levels on the index. Now the Nifty Bank has seen a very painful last couple of sessions. Now from the highs that it made on Thursday, the index is down almost 1,500 points from those levels, and today as of now completely at the flat line, and that is the index that you need to watch out for along with the financial services index in the final last couple of hours of the trading session before we head into the midweek holiday. And it is because of that holiday that is why the Nifty Bank expiry has also been pushed to today's session. What is doing well though is IT and some positive brokerage commentary coming in for these IT companies ahead of the earnings season that will be kickstarted by TCS on the 10th of October. So we'll keep an eye out on the IT names. The Nifty IT index slightly off the highs of the day, but holding on to gains of 0.7%. The broader markets, as Vinny just mentioned, doing well, particularly the small cap index up 0.6% now. So broader markets doing fairly well, but plenty of stock specific action.
Absolutely, plenty of stock-specific action. Let's not forget that, we do have a lot of pharma updates that have come in the recent times as well. But auto, that's the one we're keeping an eye out on today. As of now, Nifty Auto is not doing much, Look at Nifty Auto, almost flattish in trade. But we did have the numbers that came in from some of these auto companies. Starting with the day today, we did have M&M that reported their numbers. So yes, M&M Auto, that was above what we were expecting at CNBC-TV18. The tractor sales, that was a slight bit of a miss that came in from M&M's numbers. So yes, the management also said that the tractor sales in the second half of the year, that's expected to do well. And Shraddh, which is not an auspicious period normally when we do not see a lot of sales, that suddenly has started seeing a bit of a momentum pick up in terms of momentum. 10 to 15% pick up versus last year in that month of Shraddh, the 15 days of Shraddh. Also the sales have improved. So surely they're big on the festive season. Monsoon has been good, so that will be supporting tractor sales. Similar commentary that came in from Escorts Kubota as well. Good numbers in terms of September sales from Escort Kubota. And they too highlighted that the second half of the year will be better for them as well. So tractors, clearly the trend that we're expecting, H2 FY25, expected to be better. Let's talk about Bajaj Auto. They managed to beat the street estimate as well. Their numbers came in at around 1.32 lakh units is what they managed to sell in the month of September versus 1.18 lakhs in the last year, same time September period. They also gave in good commentary when we spoke to the management as well. 6 to 8% underlying growth in motorcycle sales is what they're expecting in the month of October. Plus good commentary in terms of the EV business, because all the EV side sales, whether two-wheeler, three-wheeler, or even the CNG side, the green portfolio of theirs, that's expected to be around the 40% of their revenue, domestic revenue, comes in from this. So yes, keeping an eye out on that. In the recent numbers, we also had Ashok Leyland and Eicher's VECV segment that came out with their sales in line numbers. Not much of an excitement there. But yes, keeping an eye out on auto sales numbers. A whole host of companies are still left to report their September sales. As of now, so far so good, seems like it, Urmas.
Indeed, and let's also listen into what the managements had to say with regards to their sales numbers and the road ahead as well. Listen.
First of all, I mean, we are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year, and that would give us an overall 5% growth rate.
Steady improvement in Nigeria and also, of course, in exports. October to December is a slightly better period in Nigeria. And that contributes to a steady upward growth trajectory for exports as a whole. As we've been saying, that month on month, we expect to see about a 10% improvement in exports. That's what we've been clocking. And I think that hopefully should continue.
Auto sales, the focus of the day. But moving on to a CNBC-TV18 exclusive, the Managing Director and CEO of Kotak Mahindra Bank, Ashok Vaswani, says that they are engaging with the Reserve Bank of India almost every week in an effort to lift the restrictions, and reiterated that slowing deposit rates are not a cause for worry. He also aims to take the bank's business to leadership positions in the next 5 years. Listening to a slice of that conversation.
India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress. Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5, right? Growth and transforming for scale is exactly what this mandate is about.
You can catch the full conversation tonight at 7:30 p.m. on CNBC TV18. So do stay tuned in for that.
Well, on to some gold financing stocks now, and they've been the ones in focus this afternoon, both Manappuram and Muthoot, and they are under pressure after the Reserve Bank of India has found several irregular practices being followed by gold loan financiers. Abhishek is joining in with all the details. Abhishek, tell us more.
Well, it's a surprise factor that, a secured product like gold financing has come under RBI radar with reference to deficiencies that have been identified in select supervised entities or players that are there in the gold financing space. So comprehensive review has been advised for all, which is a period of 3 months which has been given to them. On a review and on-site examination of select supervisory entities, adherence of prudential guidelines as well as practices with regard to loans against jewelry as well as gold ornaments, RBI has pointed out to several irregular practices. Some of them are shortcomings in the use of third parties for sourcing and appraisal of loans. Valuation of loans or gold is being done without the presence of customer. Inadequate due diligence and lack of end use of monitoring of the gold loans that have been handed out to customers. Inadequate, also transparency during auctioning of gold ornaments and jewelry on default of customer is an area of issue. Weakness in monitoring the LTV. Now, LTV is loan to value ratio, which is typically in the range of 65% to 75%. There also weaknesses have been seen, and incorrect application of risk weights, etc. have been found by RBI. So RBI has given these players 3 months to comply with the norms and get their act in place. Now, Citi has written a note wherein they have mentioned that gold loan share of lenders are, in terms of banks, Federal Bank 12.2%, Bank of Baroda 4.6%, RBL and SBI at around 3.5 to 3.8%. In terms of NBFCs, Muthoot Finance has a large share, 82.5% of the book is in gold financing, Manappuram about 52.6%, IIFL Finance about 21.2%, and SBFC amongst the top players being in NBFC space amongst the gold financiers. Back to you.
Thank you so much for that update there, Abhishek. Keep an eye out on those all those gold financiers today. But on that note, let's just slip into a very short break. After the break, we'll be putting the spotlight on India's core sector output that has dipped in the month of August. So stay tuned.
Welcome back. Now, India's core sector did badly in August with output declining by 1.8%. Now, the government fiscal data shows that the government capex too did not pick up. The RBI has also released the current account data for the June quarter. Lata is here to put all of that data into perspective.
As always, end of a quarter, end of a half year, there is a bunch of data. So let's analyze some of them. The core sector data is for August. It's a data that comes very late. Now, this is the first time in many years, I think since COVID years, that there is actually a contraction in those 8 core sectors. Almost 5 of them have shown contraction. That's coal, crude oil, natural gas, actually refinery products, cement, electricity. 6 of them contracted by anything between 3 and 8%. The positives were actually only steel and fertilizers. The possible explanation is that the August of 2023 did not see very heavy rains. So these 8 core sector industries did well, whereas August of 24 was a month of very heavy rains, all the La Nina effect, and that may have accounted for this serious difference August to August. The other thing that hasn't done too well is government capex. But before I come to that, the fiscal data showed that tax collections overall, GTR, gross tax revenues, were up by 11.7%, which is like more or less in keeping with the budget estimate and the nominal GDP. But there has been a fall in income tax and corporate tax collections in the month of August. We have to wait and watch. August is not a big month for tax collections. As we know, advance taxes are paid in September. But the bigger point of worry is government capex is down 30% year on year, August over August. This is a bit surprising. I can understand April, August capex being lower by 30%. But that is because April, May, June, not much capex happened. The government was in election mode. But you would have expected it to catch up after July and August. August also is 20% down year on year. That gives you a bit of a worry. whether the government will at all finish its capex budget for the full year. Both these are related to growth, both showing poor form, and that is why the September PMI number is worrying me. That's come at an 8-month low of 56.5. 56.5 per se is good. It's expansionary mode, but still it's an 8-month low. Are we slowing in the second quarter would be a good question to ask. The final set of data is the current account deficit data. Nothing much to complain or rejoice. The deficit has come in at 1.1% of GDP. In the fourth quarter, it was a surplus. But surplus is not necessarily good. It means savings are going out of the country. It's good to have a minor deficit. Last year, it was 1%. This time, it is 1.1%. Both of them are not causes to worry. Actually, the trade deficit increased a little more. It rose by about 15%. Normally, it gets bridged by the services exports. This time, the services exports didn't rise so much. Software exports did well, but non-software exports, the GCCs and stuff like that, they haven't grown so much. They've actually been flat Q1 to Q1. In the capital account, actually capital flows were not so good. And we all know that. The FPI flows, FII flows in April, May, June were negative. So that explains the fact that capital flows on the whole were not very strong. So the balance of payment surplus actually was just $5 billion, whereas last year, same time, that is Q1, it was $24 billion. But we have a lot of time to make up.
Sure, surely keeping an eye out on that. But, TVS Motors, that came out with its numbers, seems largely in line with what we're watching out for. Though electric vehicles has managed to see a good growth right now. We'll be back with that. But on this note, we'll take a very short break. Don't go anywhere. On the other side, we'll get you the latest as the third phase of polling gets underway in Jammu and Kashmir. Welcome back. You're watching Business Lunch on CNBC-TV18. Let's move on. And the third and final phase of polling is underway across 40 constituencies in Jammu and Kashmir. Election Commission data shows that 28.12% voters turn out till 11 a.m. 24 of the 40 constituencies are in Jammu region, where the BJP expects to do well. The remaining 16 seats are in the Kashmir region, where the Congress and the National Conference are in an alliance. The People's Democratic Party are the major contenders in the polls. The first since the abrogation of Article 370 in August 2019. The counting of the votes for all constituencies will be on 8th of October.
And with that, it's a wrap on this edition of Business Lunch from Vinny, myself, and the entire team that put this show together. Thank you so much for watching. Midcap Radar comes up next.